Welcome to the RPG Podcast.
And we are live.
Oh, God, Patton!
Presented by SHEATH. A Time Wheel production.
Hey, and we are live. Ladies and gentlemen in the crowd, thank you for joining us. Thanks for coming back to another episode of the Robert Patton Global Podcast. I'm here today with a friend, family member, but also a very accomplished young gentleman, Scott Marek, the owner of Maya Wealth. Thank you for joining me.
Hey, yeah, thank you for having me.
Also, it's Scotty 10. You can follow him on all the Twitches and whatnot. But thanks for coming on today. You got a pretty sweet view there. Are you in your office?
I am. Yep, downtown Denver. This is just Union Station right here behind us. So right on 17th and Market.
Beautiful. That's a great view. Very impressive. What made you?
Have you been to this office? Actually, I can't remember.
I've been to like two of them. That might be a third one.
Yeah, I think this is the third since we launched. So I don't think you've been. I don't think you've been to this one. I can't remember. Yeah.
I might have went in real briefly, but every office I've been to has been pretty stellar, kind of amazing with all the amenities and everything.
Yeah. Yeah.
So, like a lot of companies are doing that, the workspace, like you're working out of a community workspace, but that's kind of what you have going on, but not totally.
Yeah, kind of. Yeah, we're kind of open floor plan here. So we're kind of all like in pods out in the open. And then whenever people have meetings or something like this, they hop into one of the meeting rooms and get like 5 of those.
How did you come up, like, how did you decide to pick an office building with that arrangement? Like, how did you go about that?
It just feels more team environment, and it's a lot easier if we're just all sitting out there and you have a question, you just yell at someone like, hey, can you help me with this? Or you got a question about that.
Right. That is nice. Much nicer. But so you work the typical sort of 9 to 5?
Yeah, pretty much. Yeah. 9 to 5. And then a lot of people work remote though. So they might come in 1 or 2 days a week, or if they ever have client meetings face to face, they come in. But then, especially these last 2 years, everything's done Zoom and Slack, and
Yeah, but this is riveting conversation, but you're still paying like this exorbitant rent for or lease for this office space, even though COVID's happening, and it seems like a wasted almost expense.
Yeah, it definitely feels that way sometimes, especially what was that, April through July or so of 2020 was pretty empty around here.
Yeah, but you have the nice facilities so that you can kind of bring in a prospective client and make them feel like they're in good hands. Or
yeah, exactly. Yeah, welcome people here.
Yeah. Because we at SHEATH operate out of the house, and we all operate remotely. And I've actually had someone show up to my house thinking it was the corporate office, and ended up signing him. He was a special forces guy. Brought him on as a model and did a photo shoot and stuff. But it was strange seeing someone pull up to the house. But that's what happens when your address is on all of the marketing materials. So we need to get like a PO box or something.
Yeah, you should probably do that.
So thank you again for coming on. A little small talk action. The fact that I think you're 30, 31?
30, yeah.
Big 3-0. And you are like the head president, CEO of your own company. You have multiple employees. Like, how does this happen for someone who's so young that doesn't have a father or someone, in the industry to just kind of give it to you?
Yeah, was just always really interested in finance. I remember in college just day trading, which we don't do a ton of anymore. But we were day trading. I was doing foreign currency exchange on like Oanda, I think was the platform. I don't know if they're even still in business. I think they are actually. It's like trading, day trading, and I started doing the Forex trading just because it would run 24 hours a day. So I could go to classes, go to work, and then go home and still trade when the market would have been closed. And then started a big insurance shop my senior year of college just as an intern, and then stayed on full-time with them 2 years after graduating. And then that's where I met up with my partner, Dez. And then we were
Shout out to Dez.
Yeah. And then we're like, oh man, this is great, but we were really limited in what we could provide for our clients. We wanted to be able to really do more of like a multi-family office vibe for our clients, where we could take care of their investments, their insurance, their wills and their trusts, their taxes, all under one umbrella. So then that's why we left that insurance shop we were at to open up a RIA, which is Registered Investment Advisory Firm.
Thank you.
Yeah.
I didn't know what that was like.
Yeah. And we didn't have the capital to go straight into an RIA, so we stopped at another insurance shop that was a little bit more open architecture. Stopped there for 2 years before we were had bring on the third partner, which was Chandler. She threw in some capital, which gave us the money to be able to fully go truly independent, true RIA, that now we can fully operate however we see best fit for our clients.
Wow. So you you're in college, the traditional route, you're day trading, you're kind of trying to do something, you wanted something more, right?
Yeah.
And then you got the intern job from who? What was that? I imagine that was
Northwestern Mutual.
Okay.
Which they're a great company, really good insurance platform. They get a bad reputation because they are a little heavy on the insurance recommendations sometimes. There's some people feel that way. So that's they get kind of pigeonholed for just doing life insurance, because that's what their whole starting point was, is they did just sell life insurance. That's
interesting.
Yeah.
I might actually have a policy through them. I'm not sure.
You might. They have a lot of military, especially the Colorado Springs office. They recruit really heavily from the military, and then they sell pretty hard to that market as well.
But okay, so you transitioned to an IRA, not an IRA, RIA.
RIA, yeah.
Ooh, I got it.
So now we are more investment focused, or actually I should say probably more planning focused. So a family or a business comes to us, and then we just gather data. So we look at, okay, what do your taxes look like? What do your investments look like? Insurance looks like, and put that all into one consolidated plan. And then now, if insurance is a recommendation, we can shop 80 different companies for a solution there. Or for setting up investment accounts, that's where we are setting up IRAs, or SEPs, or solos, or simples, or taxable accounts. And then we're actually taking on the management of those assets for our clients.
Little bit of a curveball.
Yeah.
It just came up. But a buddy of mine called me about 3 weeks ago, and right before the new year, so probably like a month ago, let's say. And he's like, I got $750,000 that I need to do something with before the end of the year, or Biden is going to take it. And he started talking about registering as an international business corporation in the Bahamas.
Yeah.
Have you heard of anything like that?
So we have a whole tax team. They're actually out in California that help our clients with situations like that, and they would know a lot more than I do. But we're seeing a lot of, especially like influencers and people like that moving out of the U.S. for tax purposes.
The Paul brothers.
Technically, you're supposed to be out of the country like 6 months in one day for that to really be legitimate. So some people we see, they go down and they're down there and they work remotely from there, like Monday through Friday or something, and then they'll come back to the U.S. for Saturday and Sunday to hang out with and not work. So they're not generating any revenue when they're in the U.S.
What?
It's all generated when they're down wherever. Yeah.
Okay, that's a little bit different. That sounds like what the Paul brothers do out of Puerto Rico.
Yeah.
Yeah, but and I've heard of that, but this was a little bit maybe, I don't know, it seemed a little bit different where you register as that you're an international business. So the company's registered in the Bahamas, and I don't know what the regulations are. It probably is very similar to where you do have to live there 6 months and 1 day out of the year. But it is interesting how everybody, business, individuals, presidents, don't want to pay taxes, probably. And
you see that quite a bit. There's an occasional person that's like, I don't want to set up wills or trust. I do want to leave it all to.
Wow.
But even if that is your goal, you should probably still set up like a trust and say that that's your goal. Like, I want to leave this to, yeah. So
I would want to
accidentally end up somewhere.
Yeah, it could, because if it gets sucked into the system, then it could go to some politician's pocket. As far as I'm concerned, I would want it to go to like a park or something.
Yeah, and so you'd want to specify that so it doesn't end up with some some relative that you might not even know if it comes out of the woodworks or something like that, and they claim it. Or, I mean, that's public knowledge too if you don't have a trust set up. So there are people that just go to the courthouses and pull records like that, like, oh, this person left $5 million to their state and they have no one claiming it, so let's go after that.
Wow.
Yeah.
That's like treasure hunting.
Yeah.
So, we've been, I think, I was going to say we started around the same time, but I don't necessarily think that's true. But
2012 was when I started that at Northwestern Mutual.
Okay.
So when did you, was that?
Well, 2013 is when we launched the first Kickstarter for SHEATH. But we had actually done a pre-launch in 2010. And it was the official launch. That's when SHEATHunderwear.com started. That's when our Twitter account started. But it was quickly ran into like a roadblock where it put us behind like 3 years. So there was like a 3 years time frame where we had to figure out how we were going to get it off the ground, because my initial production was shit and I couldn't sell it. And so it took me 3 years to kind of figure out how to buy more from
And what did you do with all? You just scrapped that, or?
No, I went and worked at a tailor, and I fixed them all, and I learned better how to sew and design and come up with samples, and because the guy that I was working for was like a master tailor, and he trained me for a year while I was working his counter and going to college. After the Army, this is like after the Army, I was like 29 or 30. I was like 34. Time flies. And, so I never really gave up, but that's one of the principles of success is never quitting, because once you quit, obviously it's over. Have you run into any obstacles where you had to overcome something?
Yeah. So, Chandler, we were never really super concerned about it because we knew what we were doing was a little bit or a lot different, depending on what you're comparing it to. In 2017 is when we raised the money from Chandler to start the RA and truly be independent. But then we kind of were running out of money towards the middle of 2018. So then we had to actually raise more money at that time. And so we actually ended up, I can't remember, I think we broke even or lost money that first year, 2018. So that was kind of running a deficit every single month. We're like, definitely making a lot less than if we just stayed put where we were. But we believed in it, and so that made it pretty easy to stick to it.
Yeah, the vision is key, and obstacles are going to present themselves, and figuring the way around them is your job, as a CEO, owner, businessman. That's what we do every day. And so, yeah, it's like you guys are running huge numbers as far as that. Like, can you talk about how like revenue or kind of like anything that indicates where you're at as a company? Yeah.
So we revenue, I think we're only 11 days into January now, but I think we've already revenued probably like 300,000 for 2022.
Hell yeah.
Our average month is around 250,000, 300,000 of revenue. Because we are pretty lean. We only have 27 employees, contractors at Maya Wealth. And then we try to outsource as much as possible to the best of the best in the industry. So we'll use like a Goldman or BlackRock or Vanguard or whoever to help with the portfolios.
Yeah.
So then we can charge much lower fees to our clients and kind of keep that cost for the clients down. So yeah, it's around 300,000 or so a month right now.
Wow. That's pretty, that's right around that's what I was going to say when we started around the same time, and it seemed like our trajectory seems to be about the same as we were growing year to year, because that's kind of where we're at as a company. But we want we want 10 million this year, gross.
Yeah, I don't know if we'll get to 10 million this year, but yeah, we should probably 5 million this year, and then 7.5 or so the next year, and then 10, 12 the following year is kind of our goal of revenue.
Yeah, I mean, we kind of aim big. It's not terribly reasonable for us to want 10 based on last year's numbers, but based on our growth year to year, we're shooting like a little above our annual. We typically double, in size annually, and it would be a little bit more than double this year. But we're just stretching our goals a little bit and see if we can hit it.
Oh, and that's what I love about your business. I feel like you can kind of exponential growth a lot quicker than a company like ours can.
Why? Because of risk?
You can just go viral, take off, and just as long as you can get the inventory for it, you're good.
Right. For
us, if each advisor can really only handle 100 clients, so for us to add more revenue, we add more clients, but then each time we're adding about 100 clients, we're having to go higher and find another certified financial planner, someone who fits the culture, fits everything that we are shooting for.
And that raises expenses. I mean, the more people you have to,
So then cost goes up. So yeah, we're definitely service industries. Maybe that's not true, but it just feels a little bit harder to really exponentially grow with a service industry compared to a product industry.
Yeah, unless you're an internet web, because those are the ones like the Facebook, whatever. That's a bad example, but any kind of app or something, I feel like has the potential to grow because there's no product except digital.
True. Yeah. So a robo-advisor would be kind of in our industry that could definitely exponentially grow. I feel like they could, at least a Betterment or one of those Wealthfront, where I feel like they could just bring on 1,000 clients overnight and they wouldn't even notice it. Where if we brought on 1,000 clients, then we're 10 more advisors and yeah.
You use Betterment though, right?
We do, yeah. So we use Betterment definitely for some clients, and because their technology is awesome. They have the automatic rebalancing, tax loss harvesting. They're huge. So we use them quite a bit, and then they could help us kind of grow quicker without letting the service slip up.
Nice. Yes, absolutely. Automate some things. Automation is key. I mean, it's very helpful anyways. But speaking of apps, it was brought to my attention that you, when you were younger, developed your own app. Can you tell us about that?
Yeah, I wonder if that's still alive at all. So I was in college before I got into this business. It was an app called Beer Strip. And it was only on the Android because we couldn't find anyone to build it for us on the iOS at the time. Beer Strip. And so as beer bottles fell on the screen, you would catch them, and then we would have a model strip on the side.
Okay.
Nothing too revealing. It was all PG, maybe PG-13. Okay. Yeah, so we kept it PG-13.
That sounds fun. That reminds me of there's this show called Silicon Valley. Did you ever watch that?
Yeah, that was a good show.
And that guy that made the boob detector or whatever, the nipple, hard nipples. This episode is brought to you in part by Element Kombucha. It's a new sponsor. We're very excited. They sent me a care package, and I drank them all. I can't even show you. I could show you this empty bottle right here, but it's Element Kombucha. They have CBD infusions, THC free, really tasty blends. Kombucha is good for the gut bio. So if you have been taking antibiotics, it's always good to take some probiotics. And Element Kombucha is sponsoring this show. They're supporting us. So we're asking you to support them. They actually have really good prices. It's like $10-15 for a 6 or 8 pack on their different options. They have variety packs, or you can just get the Summer Vibes blend, whatever you want. It's at elementkombucha.com. Promo code RPG11 will save you 11% on your purchase, and they'll know that we sent you, and we would appreciate the support. Last but not least, SHEATHunderwear.com, the greatest underwear on the planet, the underwear of legends, the underwear that keeps your balls from sticking to your legs. That's right. This is the best underwear because it keeps your boys cool. Check out SHEATHunderwear.com. Back to the show.
No, I wanted to actually change it and make it more family friendly, where it'd be like apples falling from a tree and like a squirrel or something caught it, and then you just get points. I wanted to do something to make it more family friendly and go a little bit more mainstream, but the developer quit on me. Alex, yeah, I'm still mad about that. I think you've probably met Alex at some point. I don't know.
Maybe.
Yeah.
I don't know. I mean, businesses are so hard to start, but I guess starting it is kind of easy. It's the maintaining it and keeping it going.
Yeah, especially apps. They're constantly breaking, constantly bugs. Have the Android updates something, and then it doesn't even open anymore. The screen sizes change. It was constant.
No, that's funny. But you were always a hustler. Like, so when I was a kid, I was always a hustler too. I did things to make extra money on the side, not necessarily legal so much, but I always had that desire, that hunger for more, like that. And it seems like you did as well.
Yeah.
I know, Stacy, it's my wife and your sister, but she said, like, when you were a kid, people would ask what you wanted to be when you grew up. Do you remember what you would say?
No, I have no idea.
She remembers all this stuff. She said you wanted to be rich. Yeah. And that's pretty vague, and it seems like a lot of kids would say that, right? But then when I'm privy to some of your behind the scenes things, and I've seen these documents you've created of your visions and your goals, and they're so meticulously laid out and planned out, whereas mine are more vague. Mine's like, I want a jet, so in my mind, if I get a jet, then I've done everything I need to do right because I have a jet. But you were like laying it out in detail, step by step. It's 2-year, 6-month, 5-year, 10-year plans. Very organized.
Yeah.
And it seems like you're making progress faster than someone like myself would have made because of the detail in the vision. That's what I see. I don't know.
Oh, yeah. Yeah, I don't know where that is. That Grant Cardone? It might have been Grant Cardone. I was definitely doing goals before Grant Cardone, but in 10X, he definitely was that book where he talked about, and I don't know if he talks about that. Someone talks about, like, you have to be very, very specific of, like, you can't even just say this car. You have to say what color of that car.
Nice.
And, like, really envision it to help get it come into reality, and also help get excited and stay on and stick to, okay, what are the things that are important. And then 10X is definitely where it's like, okay, let's make these goals much bigger than they were previously.
Right, because I remember something about the idea of, if you can make $100 in a year, why can't you make 1,000?
Yeah.
Like, just think bigger. And
that's what's fun too. I track all those goals too in Evernote, so I can go back and look at, okay, what were the goals in, I think it was even 2014 or 2013. And that was with Des. We were like, okay, if we could each make $100,000 or something, that would be, or I think that was even revenue. I don't think we were even looking at profit. I think we were like, oh, if we could revenue 200K, and we were 50-50 at the time. So it's like, oh, 100K for each of us for revenue. That'd be insane. And now it's like, okay, 300K a month. How do we get that to $1 million a month of revenue? So it's just kind of crazy to see it change over time.
I love that you keep notes like that. I would like to go back through I have vision boards, and a lot of the stuff I've had on the vision board has come true. Like holding the UFC belt, for instance. I had like.
Did you do that?
I had it. Yeah, I was holding it this probably like September sometime. I was doing a photo shoot in Vegas with Brandon Marino, the UFC champion of the world, who's fighting in 11 days in Anaheim, where I'm going to see him fight. Yeah, I'm going to go ahead and go with my older brother.
Awesome. That'd be sweet. And
yeah, like, so hopefully he wins. The last time I went to an event where one of our fighters was fighting was Donald Cerrone fighting. I missed your wedding.
Yeah, my wedding was that same night. I remember that. He was fighting McGregor, right?
Yeah, McGregor, and then he lost in like 20 seconds, and I was just like, what happened? What FML? You've heard that term?
Yeah.
Just kidding.
Was it 20 seconds? Is that what it ended up being?
Yeah, it was like a minute and a half or something.
Oh.
But yeah, but still, like I would have hoped for a much better fight, and it's so weird, like how these opportunities come about, and then you put all these expectations on something like that, and then they lose, and it's kind of like a kick in the stomach, but business still goes on, like that was, but had he won the what ifs, you beat McGregor on this world stage, and you're representing our brand, but you lost. So like, do you have any experiences where you, like in business, where you were like really hoping for something and then it just like fell short, and like you got, because I have a couple where it's just like I got a kick right in the gut, and it stings pretty bad.
Yeah. So, I mean, we have that now. So now at this level, it's more so focusing on adding advisors more so than where I'm not really out there trying to add clients, like an individual client at a time. I mean, that's still my favorite part of the job, is dealing with clients one-on-one. But more time, or more efficient use of time, is advisors. And we had an advisor, we were working on a deal for like a year, and he had like 120 million of assets that he managed. And he was a really nice guy, really sharp guy. So we've been a good addition to the team. And it would have added immediately overnight like an extra $1 million of revenue, because he's already revenuing that. And we were all ready to go, like lawyers done, everything done. Comes up here to this office, actually right here. I was probably sitting in this chair. And then the deal just blew up. And he's like, nope, I'm not. I'm just gonna, because we needed a succession plan for, okay, this guy's 60 or whatever he is, like he's gonna retire at 65. Who's gonna take over his clients? So we had an advisor that we were gonna have do that, and they just kind of butted heads. And we thought they would mesh really well, but they kind of butted heads a little bit, and so haven't heard from the guy since.
Oh no! Did you fire that advisor?
No, he's still good. He's a good advisor. He's a good guy, but he definitely could have handled that conversation a little differently, probably.
Okay. that reminds.
I mean, his perspective was, let's get it all out in the open now, instead of it being an issue down the road.
That sounds like someone I know who just tells all the dirt so that you don't find out later,
Yeah, but I think, okay, work together with it. I mean, we don't even know what things are going to look like in 5 years. We don't know we don't know what fees are going to look like in 5 years. We don't know what anything's going to look like in 5 years. So I think you work together for those next 5 years, build rapport, and then hash out the details of how much you want to sell the business for or whatever.
Right. And you can, exactly. You adjust, you can figure it out as you go along. Like
I think one was trying to lowball, and I think one was trying to get the high. And I think really their real numbers, that talking to them individually, their real numbers they had in mind were a much smaller gap to bridge than what they were presenting. So I think they were a lot closer to than they will ever know that they were.
Yeah, that's frustrating. Because I had I was just in negotiations with Tim Dillon's management, and Tim Dillon's a comedian, and he just had Joe Rogan on his podcast yesterday. And so last night I was in bed, like kind of punching myself a little bit, not like kicking myself. I was just like, because I was lowballing, they were highballing. I coulda, shoulda, woulda accepted the lowball. I don't know.
Their highball.
Well, it wasn't even. He was actually giving me according to him, a discount, because the high price per spot on Tim Dillon is $16,000 for a 1 minute ad read, and he was giving it to me for half, and some other stuff, but like it was still double from what I paid in 2021. So I was like, "You're gonna double it?" Like,
yeah.
And I was feeling like we have this relationship. I felt like I could negotiate, and ultimately I was like, you know what, if you can get that much, just go ahead and take the money, and we're gonna like move on, basically.
Yeah.
But then I see Tim's on Joe Rogan and Joe Rogan's on Tim, and I'm like, and like Joe Rogan is like the pinnacle in my mind of media, and like it's like I could have had Tim with Joe on, and it's kind of like something I really wanted, and then I blew it by being too difficult with the negotiations or whatever, even though at the time dealing with the information I had at the time, I feel like I made the right decision. But now seeing what happened subsequently, and I'm like, oh
yeah, that's always hard. Is that typical where you do have to kind of say a low number and then they work you up to a higher number? Is that kind of typical in that?
It actually is pretty standard. It's like set based on CPMs. It's like cost per million, and the million is actually 1,000, but it's like 25 cents per 1,000 views. And
it's like the average views that they get per video or something.
Right. And he was projecting for 2022. And in my mind, I was like, he's not hitting those numbers right now. Like, and he's nowhere close to hitting those numbers, and we're not hitting our numbers. So I'm not going to double, because then we're going to be losing money. And then next thing you know, he's hitting the numbers, and I'm like, I should have, could have, should have, would have. But it's, so to all last night and today, it's been been this mind fuck where I'm like, okay, I want to be okay with losing out in that opportunity, and I'm trying to make it make sense in my mind, like, because there's nothing I can do. I can't go back in time, and the ideas, they're like, well, you'll have that money to put on someone else that's coming up,
and someone else might come up that now you have to budget for.
Well, and there you go. So in this book we just finished reading called The Science of Getting Rich.
Oh, I thought you were about to say Think Like a Monk. I was like,
Think Like a Monk. Yeah, I still have that book downstairs, actually. I don't know why that book was kind of giving me this weird, like, brain.
Oh, yeah, you said that.
Yeah, it was making me think weird thoughts. I don't know. It was kind of strange. And because I feel like I meditate twice a day. I do yoga. I work out. I don't know. Like, I'm trying to be monkish, but maybe I should have maybe skipped forward to another chapter. But with regards to The Science of Getting Rich, which I highly recommend, it's a tiny little book. You can read it in like 3 hours, but I recommend reading it over a course of a few weeks. But it talks about when an opportunity, like when you want something and you don't get it, like you wanted this job and you didn't get the job, you're supposed to still like remain grateful and have gratitude and a positive attitude, because it says like the universe knows better. And if you just stick with it, a better opportunity is going to come down the road, where if you took that previous opportunity, or if it, you wouldn't have had the chance to take advantage of the other opportunity. And so I'm trying to like be hopeful that another opportunity is going to present itself, and that we'll take that one, I guess.
Yeah. I believe in that as well.
Yeah.
I wonder if I read that book. I'll read it if I haven't. I'll go scroll through my Audible and see if I've listened to it.
It's so good. And yeah, I would maybe even listening to it is better, because it's old, it's dated, but
it's like Richest Man in Babylon. I think this seems more like mindset focused, like almost like The Secret. Is it more like that?
A little bit like The Secret, sure. Yeah. In fact, one of the in the movie The Secret, one of the people telling their story referred to this book, which is why I read it.
Really?
And he got in a plane crash, and he was in a hospital, and he couldn't speak, but he was thinking, and he couldn't like communicate to the doctors and the nurses. He could see them, but he couldn't do anything. All he could do was think. And he's like, if I have my mind, then I have something. And he's just like, breathe, take deep breaths. And he started taking these deep breaths, and slowly but surely he was able to move a pinky. And then, he never fully recovered.
Yeah.
But he mostly recovered. He's had like a weird kind of voice because he crashed a plane. And so he had some kind of tricky thing happening, but he was, he used his mind to get better. And, like it talks about the power of the mind and how we have the power to influence the universe. Because they say that God says we were created in the likeness and image of God, and other like success books say we are all one, right? We're all one. If you take mushrooms or something, you'd be like, we're all one. It's all love, But in the book, so if there is this universal mind, and we're created in the image and likeness, and we have the potential to affect the universal mind through our mind, it kind of talks about how we have that ability through impressing upon this he calls it a thinking stuff. And like everything is made of this thinking stuff. Like right here, it's all right here, the thinking stuff. And if you just visualize what you want and put it out there, like that's the first start. Of course, you have to take action, but everything starts with a thought, right? Conceive, believe, achieve. But I mean, and you read a lot of these types of books too, right?
Yeah, I actually just finished up, as you were going through, I was just finished up Will Smith's autobiography.
Oh.
And it was actually really good. And I did the audio version of that as well. And he narrates it himself, and there's music, and it was really good. And he kind of talks about a lot of mindset stuff, like just brick by brick. No matter what happens, you wake up the next day, lay the next brick. You're starting a business, just control. It's kind of, I took it as kind of just control what you control, and just always moving forward, kind of no matter what's going on around you, or just kind of, it's pretty good.
He's great. He recommended a book called The Alchemist.
Yeah, I think he mentions that in this book again.
Yeah.
Have you read it? Is it good? I don't think I haven't read it though.
Oh, I've read it a couple times. In fact, Stacy just read it, my wife, like yesterday. She finished it yesterday, and that's kind of why it's on my mind. But also, you brought up Will Smith, and he like specifically suggested it to me. I was watching a YouTube video, and he was like, "It's a short read. It's quick. You can read it in like a day, and you can." That one also, so good. Such a good book.
I need to read that. He also talks about, in this book, he talks about the hero of 1,000 faces. And I've now heard that mentioned. I think it's Ray Dalio or Carl Icahn, or I hear it mentioned a lot, or Tim Ferriss. I hear it mentioned like by Tim Ferriss. I hear it mentioned by like some investment person, whoever it was, and now Will Smith. So it's like that book seems to be a
What is it? Of 1,000 faces?
Like a hero of 1,000 faces or something like that. So that's I just bought it. I can actually check now.
Oh, it's a book?
Yeah.
Okay.
But I'd read Will before that.
Yes, Will.
Oh, Will is good.
Well, and then there's this other book I'm reading, which I'll recommend. It's called Limitless by Jim Quick.
Yeah. I've seen his stuff.
Yeah, so far so good. And I think he talks about working with Will Smith. It's all connected.
Yeah, and then Jay Shetty of Think Like a Monk, he works with Will Smith like an hour a day or something crazy, like 5 days a week.
Whoa.
They meet up and go through mindset stuff. And Will Smith talks about that. He goes on Jay Shetty's podcast On Purpose. And the Will Smith interview on Purpose, really good. Yeah.
Really?
Yeah.
Wow, there's a lot of stuff here. Got to take notes here. Will Smith on... What's it called? What's the podcast called?
On Purpose. I think it's the #1 podcast in that space.
Okay.
Whatever that space is.
Self-help, maybe.
Something like that, yeah.
We're trying to get there. This is a self-help sort of space.
Yeah,
podcast.
That'd be awesome. Where do you put this out? Are you putting it kind of YouTube, or where are you putting it?
Spotify, YouTube, iTunes, and I think that's it.
Yeah, that's awesome.
Podbean.
Yeah, I want to get one going too for helping people answer simple questions about what's the difference between an IRA and a Roth IRA. And there's a lot of people doing that, but I watched some of those and they're really good and entertaining, but there's a lot of misinformation out there.
It's intimidating to think like, okay, there's 1,000 people already out there doing this, and now I'm going to jump into the mix. So my advice would be just do it anyways, right? And just start doing it and keep doing it, and have fun. Have fun for yourself. Worst case scenario, something like Gary Vaynerchuk would say, you're documenting your journey, and you can look back on it when you're 80 and see.
That's kind of a cool way. Yeah, just kind of do it just for even that would be kind of cool.
Yeah, exactly. Because I find myself sometimes questioning, like, what are you doing? Like, who do you think you are? You Joe Rogan or whatever. But
it's like my Twitch channel. I get like four people watching.
Yeah,
like Rocket League of chess.
Yeah, exactly.
Watching you whoop me at chess.
Dude, I went on a streak of chess, and I was up to 800 as my score on chess.com or whatever, my ranking, but now I'm back down. But I do have some good. I already talked to you a little bit about it, the Scholars Checkmate.
Yeah, you said you're bringing the queen out early.
Yeah, and I'm
going for the 4-move checkmate, and then what are you doing? You're coming across to
take the pawn. Like you come out to whatever, and you come across and take the pawn. But it depends on what counter move they make, and there's some counters that they make where it's like, okay, now I'm learning, like, they're already hip to this. Let's not even try this, because ultimately it'll end up backfiring and you waste a lot of moves. Yeah,
or you lose tempo, because then you end up just having to bring the queen back to where she started.
Yeah.
I know I tried that against you that one time, and I could have easily just taken your rook, and then I could have taken a pawn or knight or something, but I just screwed up and went the other way and got like a pawn maybe, and that was it.
Yeah, it's a practice, and I almost feel like it's a waste of time, honestly. I don't know, because you have this concentration, and please prove me wrong or whatever. Like it's fun, so there's that. I enjoy it, but now I'm playing like for a couple hours a day, and it's like I have a bunch of emails probably some people need responses to.
Yeah,
I got a pile of papers I need to go through.
Well, I've heard conflicting arguments on that. I've heard getting good at chess does nothing but get you better at chess. Other people say it helps train your mind to focus and train strategy and thinking ahead. And well, I don't know, whatever route you want to believe there.
No, I like your second route. At least I would
rather believe that, and then you don't feel guilty playing 2 hours a day.
Yeah, And another thing, though, that I love doing, which is another reason why I like doing the podcast and recommend you starting yours, is that purpose right there, the focusing, the engagement. And it really is an exercise in communication. You know? So, like, okay, so this is a question, random slightly, but you listen to some podcasts, and are they like question and answer, or are they conversational, or kind of a mix of both? And what do you prefer?
Mainly conversational. I obviously listen to a lot of finance ones. So like the creative planning president guy puts out one. I can't remember what it's called. I think it's Down the Middle. I listen to that. I listen to Morning Star, Wall Street Journal, some of those. But then for fun ones are like Joe Rogan, or recently it's been more like Full Send.
Oh, wow.
So like Full Send had Dana White on it, which was really interesting.
Yeah, they're having crazy guests.
They got Antonio Brown on right after the whole getting cut from the Bucks thing, so that was interesting. What else did I listen to? So it's more long, and then a lot of the finance ones, just because if I'm considering getting into doing some sort of podcast, I want to see what's out there in the personal finance space. So listening to some of those.
Okay, yeah, I like the conversational ones, just because it's, you know, I don't know why we like listening to other people talking. There's got to be some benefit, I think, because it's like, why don't you just have the conversation yourself? But sometimes I'm like, I'd rather just listen. Yeah.
Well, I feel like I feel like you can learn a lot just from hearing people's different perspectives. Like even listening to something that's the complete opposite of what you believe, just listening to it, to hear their perspective more. And so I don't feel like I'm wasting time if I sit down and listen to an hour of Full Send, even though if you watch their other channels like Nelk, it's
they're amazing. I saw them a couple of last month, or I guess maybe it was December or November. They were out here in Denver. Yeah, and Dana White was there. I went to a fighting event, and they were there with Dana White, and I was like, Nelk. They looked over. I was like, I see you, and then I saw that. Yeah. So that was
good to see that SHEATH was everywhere at that one.
Yeah, that was a big one. All the girls.
Is that like the main sponsorship in? Because you guys had it everywhere, like decked out.
Yeah, we do, but it's a smaller organization. That's LFA, the Legacy Fighting Alliance, and they're the feeder league into the UFC. You know,
does UFC own that still, or what? Because it seems like Dana White was supportive of it.
It's in the mix. I don't know if they own it, but they are friendly, organizations. They all work together to build a sport, I guess.
Because he doesn't seem to work well with like Paul brothers.
No, and
he doesn't seem to like them, or it seems like he likes one. Or Jake, or he doesn't like Jake, but likes Logan.
Yeah, they were going at it as they have been, and Jake kind of tore him a new one, like in a recent response to Dana White, saying that Jake Paul was on performance enhancing drugs, and then Paul was saying Dana White was doing cocaine, and
that's what it was. Yeah,
it was, and he kind of made Dana look a little silly. I was thinking, in my opinion, I was like, whoa, he kind of just owned him because of the way he's talking about, paying the fighters more, and he's just. I know it's easier said than done. Hey, why don't you just pay your fighters more? Well, hey, we're trying to run a business and keep it going for a long time.
Yeah, and trying to grow it and trying to reinvest in other things.
Yeah. But so it's easy to say, pay them more, but like, what is I don't know. That's a debate that they can have. And I it's like Bernie Sanders saying pay people $15 an hour or whatever. And then it's like, okay, but then we got to charge more. So like, I don't know. It's more complicated than just saying a number.
Sometimes it's a lot harder than people think.
Yeah, because sure, I can pay you that right now, but then what if sales go down and then I'm stuck paying you? I can't take it back.
Exactly, yeah.
Because that's the hardest thing is giving people a raise and then be like, you kind of need to take that back.
Well, people probably think that with underwear too, thinking like pricing could be different or comp could be different, but like when you really get into the margins, there's not any business. I mean, the margins are, or I guess probably not any, but like ours were like 20% or something is the margin.
Yeah.
And our goal is never really to grow that margin, but we want to leave enough margin there. If we do have a 2008, 2001 market's down 20%, we don't want to have to lay off people or get out of this lease, or we don't want to ever be in that type of spot.
Yeah. No.
If market's down 20%, our revenue essentially could go down 20% as well. So we're directly tied to that. Or like used sales could go down. Yeah. Same thing.
What are you directly tied to? What did you say? The mortgage something?
The market. Yeah. Yeah. So if our clients are losing money, then our revenues go down as well. And a lot of our costs are fixed, like the office is fixed, or a lot of our support staff W-2 salaries are fixed. A lot of this stuff. So a lot of software expenses are fixed. So
yeah. So you have to account, and the market has done nothing but go up for quite a while now.
Yeah, it's been a crazy couple of years.
Yeah, and everyone thought it was going to go down when Biden got elected. Not everyone, when Biden got elected, but it didn't. And so it's just like, what is happening? And will it ever? Can you give your opinion or kind of thoughts on the future of the market?
I think our opinion or stance on that is no one really knows whether the market's going to go up or down. Whoever's in office, market goes up 70% of the time, 7 out of 10 years. If you look at since 1920s,
right.
7 out of 10 years on average. If you're looking at a 1 year period of time, the market's gone up. If you look at like a 5 year rolling period of time, it's gone up 80% of the time. So yeah, you could invest today and it could go, you could have another 2008, 2001, but as long as you're looking at 5 years, you're going to come out ahead 80% of the time. But if you're looking at like a 15-year period of time, historically speaking, I mean, past performance, no guarantee of future returns and all that, but 100% of the time over a 15-year period of time, historically speaking, the markets, you've made money. Just by buying diversified, low-cost ETFs. So buy some like U.S. large cap, small cap, mid cap, international, developing, and then rebalance that occasionally to get back to the mix that matches your risk tolerance and your goals and your objectives. So that's really what we're always figuring out is, okay, like how much money does the client have? What does their budget look like for saving? And so how much risk do they need to take? What return do they need to get in order to hit those goals? And then do they want to dial it up or dial it down from there? Yeah. And then looking at long term, people who are trying to time it, that can be, I mean, you could come out ahead and crush it and buy Tesla, whatever.
Yeah.
Go the other way.
Yeah, it's always a gamble, it seems, but not so much actually if you do the long game. But
yeah, if you're looking at 15 years out and you're diversified, low cost ETFs and rebalancing it, you should do all right.
What about the interest rates and how that would affect? Like, there's like talk of them raising the interest rates and then they don't. Or
yeah, we're in a pretty unique situation where with rates as low as they are, markets as high it is, as much money that's been put into the market. So no one again really knows how that's going to play out. And we're say with inflation, people are arguing so that with all the money being put out there, inflation might continue at the crazy high numbers we've seen. Although 6% is not that crazy. Because of how low it has been, we're kind of just catching up. But the other argument of that is with technology, the cost to maintain our standard of living that we're used to here in America is going down. Because if you look at 100 years or even 20 years ago, being able to do this conversation with this webcam, with this mic, with over the internet, with gigabyte speeds was pretty unheard of, or if it did exist, is extremely expensive.
Right.
Now, anyone with a iPhone, iPad could do this. So like the cost of maintaining our standard of living is going down. So then that would drive inflation down, actually.
I hope so.
Yeah. So who knows where we are at with that? I don't know.
And then on the cryptos, I heard you were kind of talking about maybe getting tipping your toe in there or whatever.
Yeah, we like having it for some clients who have already done a good job. They're already maxing out their IRAs. They're maxing out their 401ks. They have their emergency fund. They have a buffer built up. They want to play around with it. Throw 2%, 5% of your investments towards Bitcoin, Ethereum, whatever you're into. Or if you want to be more conservative, you could buy something like Block, BLOK. And again, it fits your risk tolerance. It fits your long-term objectives. And then that's investing more in like blockchain technologies instead of a specific crypto, like a specific Ethereum or Bitcoin. Yeah. And if you dig into the companies that they're actually investing in, it's kind of funny what some of them are. It's like PayPal and like Square and companies like that are the ones that are really heavy in that space.
Interesting.
Actually, I think didn't Square change their name? Or they're talking about changing it to Block, or I can't remember, but yeah.
I'm not sure. Interesting. Square. I know like the Cash App and Square and Venmo and PayPal. They're like Well, you can buy cryptos on some of those apps, and even like a lot of the apps, Robinhood, all these different apps.
Yeah, so we think it makes sense for a portion of someone's portfolio.
Yeah.
If they're into that and they want that exposure and they're willing to take the risk of, like anything, it could go against you.
Yeah, mine's going against me at the moment. I don't like what is happening. Like, but it's not that far down.
Because which ones are you in? You're in Bitcoin, Ethereum,
Doge? Ethereum. Not so much Doge. I got out of 88, but I bought back in a little bit recently, just a tiny little bit. There's something like Solana or Solera.
Yeah.
I bought that Shibu.
Yeah.
Back when it was, I'm like 1,000% up on Shibu, but I only put in like $1,000. So
okay,
maybe not 1,000%, like 700.
That's still pretty good.
Yeah. It is, and it's fun, and that's why everyone's like dumping their money in there. But like and what I'm doing is I'm playing like the long game. I'm like, okay, I'm done day trading with these, because at first I was, and I made probably $100,000. I don't even know, like something pretty ridiculous over the past 5 years playing around with cryptos, but.
Yeah.
Now I'm like, it's going down, and typically I would have sold and let it go, whatever. But I'm like, I see the trends, and so what I do is when it goes down, I buy, and then But lately I've been buying. It's been going down, I buy, and then it goes down further, and I'm like, shit.
Yeah, and there's not really that long of a track record with those things. So when I'm talking about like 15-year rolling numbers with like the market going up historically 100% of the time in a 15-year period of time, you don't really have data like that for these cryptos. So
no, it's very risky.
There's a lot of people making a lot of money if the ones that got in early enough and timed it right. There's a lot of people losing a lot of money too that probably aren't as vocal. Right. Like the people who put in at the peak and are down 30% or something, they're probably not as vocal as the people who bought in when it was $2 a Bitcoin or whatever it was.
Wow, that would have been amazing. Yeah, but and we're coming up on time. I won't keep you too long. But like you were day trading in college. Like, did you make money doing that? Were you good at it? I saw it more of just kind of learning experience. Okay. I was trading. Well, I don't recommend this at all. I was trading like 50-to-1 leverage. So if I had like $1,000 in the account, I could be trading like $50,000 worth. Wow. And that was on the Forex. So I was trading. I can't even remember. I could have actually pulled my notes. I have them in Evernote. So that's nice. I can always pull up. I was trading like yen versus dollar and dollar versus
pounds. Like,
wow.
that was fun. I don't know if I ended up actually. I didn't even really care or track it at the time. I was more so just doing it to. I doubt I made money.
Right.
I should actually go pull that up to see if I ended up coming out ahead or not.
That's funny.
Yeah.
So you made it all the way to. You're in this high rise in the middle of Denver with a great view. I see some stuff back there. A crane. They're building more construction. What's 10 years from now? What do you want to? What are you looking? Where do you want to be?
So we have 27 or 30 people now involved at Maya. I'd like to get it to grow it to 100 or so in the next 10 years. Managing. I mean, this is a 5-year goal, but yeah, I think within 5 years we'll get to about 100 people at Maya is the goal, and $1 billion of the assets under management that we're managing, and then $1 million a month or so of revenue. And doing that though without ever trying to really focus on providing true comprehensive planning for our clients, being truly independent, so not incentivized to sell a certain product or anything like that, and then really providing top-notch service for our people, our clients, and our advisors and our staff as well. I'm really focused on that as well.
And that's not like hedge fund level money. That sounds like hedge fund.
I don't know. Some of these hedge funds don't. So some of these hedge funds only manage a few $100 million. A lot of them do, but their fee structure's a lot higher. So their clients are paying much, much higher fees than we do. So like the typical hedge fund structure is 2 and 20. So they charge 2% base across the floor. And if they make you any money, they take 20% of whatever they make.
Wow.
We're under 1% for our average client. We start off slightly higher than that, like 1.2%, but then it goes down for the clients. And then we have there's no account fees, there's no trade costs, there's no performance fees. So we don't have any of that other stuff that some of these hedge funds have. So that's how they can revenue, and the hedge fund managers themselves can just crush it.
Yeah, having yachts and shit.
Yeah, we ran the numbers. If we charged like hedge funds do, and it's like, geez, our revenue would be 5x in like especially years like last year where the market's up 30% or whatever it ended. Yeah, it's crazy.
But this is what sets you apart, and this is why people are joining your firm. Right?
Exactly. Yes. Yeah, because we're focused on trying to lower fees instead of how do we maximize revenue.
I know one of your clients that I spoke to made a pretty penny, like doubled their investment. It seems like, and I don't. It was like over a couple of years or something, but I think the market was maybe doing that for everybody. I don't know.
Yeah, the market's been really good the last few years, so that definitely helps.
Well, I definitely recommend My Wealth to any listeners and watchers kind of interested in investing and getting more information on that. They could contact you or your firm to get more information.
Yeah, that'd be great.
MayaWealth.com.
MayaWealth.com. That's it. It's the way to hear more.
M-A-I-A.
Yep. M-A-I-A. Yeah, Roman goddess of growth.
There you go.
Yeah.
See?
We were doing Shoe Dog about Nike, and Roman's got a victory at the time when we came up with the name. So
I like it. It's kind of got a mystical aspect to it, and we could use all the help we can get.
Yep.
The gods bless us with whatever with massive wealth, please, and health and wellness and love. And it's not all about money. It's about relationships and inner peace and helping others and stuff like that. So the more money we make, the more we can do all that. I feel that's my philosophy.
Yeah, more you can give back, more you can do a lot more with it.
Exactly. So that's the goal. We're going to make as much money as we can so we can help the world and the people around us and ourselves a little bit in the process.
It sounds good. I like it. Yeah, this was a fun time. Good chatting with you. Yeah,
it went by really quick. typically just chat. So I appreciate you playing along. I don't have like a format per se. We just talk about what's relevant at the time and see if hopefully people get something out of it, because, you know, for both of you or all of you out there watching, the two of you, we both have successful businesses and we've built them from the ground up, and we're trying to share that with others. That's what this podcast is about anyways, is trying to help other people learn that they can do it for themselves. And so hopefully that happened today. And thank you for coming on.
Yeah, thank you for having me.
Yeah, love the view. I'm very proud of you. You're doing great. Keep up the good work. Thanks. Stay positive. And we'll have to do it again, you know, every so often, annually or so. Check in.
Let's do it.
Look back when we're 60 and laugh.
We'll get ours going and have you on there as well.
I would love that. And yeah, and I'm invested in with the firm, just for you guys' information. So I have some money in, so I definitely recommend it. And, you know, you can at least get some questions answered. So,
yeah.
And follow him on Twitch. It's Scotty10.
It's Scotty10, the Twitch channel, Rocket League and chess.
Yes, it's a good time. You're a good dude. I wish you all the best.
All right, thank you, man.
And all of you out there, I wish you all the best. Whatever I want for myself, all the good things I want for you as well. So let's make this world a better place and have some fun in the process. We will see you next time. It's the Robert Patton Global Podcast.